Thursday, November 9th, 06:41 a.m. New York time. Good morning. This week's commodity market update. Looking here at the US dollar index. Commodities are priced in the US dollar. So here on this chart, it's a 1-year chart. Each candle represents a week. So the current week, this candle on the far right, will be done tomorrow. So for the current week, it already took out the low of last week, which was that red candle. And currently, price action has us back inside the body of the prior week. So here's the low this week. Here's the high this week. Again, this will be done Friday. Again, the current trend is down. Weaker dollar has often an inverse correlation with commodities, making commodities go higher. But other things taking account: the demand for the product and the cost to produce, manufacture the product. So that alone does not necessarily mean the commodity is going to go higher. But again, dollar, here's the high of the year. Here's the low for the year. The dollar is strong. Prior trend was up. It's in a retracement mode. So dollar strong, helping to keep commodity prices lower. So now we'll first look at the category, because commodities are several categories, one of them being energy. And we'll look at the two most broadest financial instruments in the energy, one being crude oil. Here's the high for the year. Here's the low for the year. Current week is red, lower high, lower low. The trend is down. Yeah, very close to the bottom. Huge dump. Coming into a prior key level. Look at this. All this was mostly above $75, this red horizontal line. And this minor was down. So again, potential area of buyers stepping in here. Big round number, 75. So if you're bullish, I would be considering looking for opportunity to be buy down here. And natural gas. Here's a high for the year. Here's a low for the year. Look at this staircase pattern, higher high. Yep. That's the current momentum to the upside. And for the week, it's red. Lower high, lower low, broke below that inside candle. Broke below midpoint of this red candle. Again, the weekly's not done yet. Let's zoom out here, see what's going on again. It's in a huge consolidation here. One would consider that the current momentum's up here. The higher time frame, it's retracement mode. If you're bullish, one should be considering to look for a buying opportunity here. Buy on the dips if you're bullish. Next category, metals. Gold. Here's the high for the week. Sorry, here's the high for the year, this yellow horizontal line. And this yellow horizontal line is the low of the year. Red, lower low, lower high, broke below that inside candle. Current trend is down right now. Potential area of buying may be here, which is also right around a big round number, 1900. Silver broke below this consolidation as well too. Here's the high for the year. Here's the low for the year. Platinum, here's the high for the year. Here's the low for the year, very close to the low of the year. Also, this is a swing low it's coming into. Yeah, look at that big dump for the current week. And copper, high of the year, low of the year, very close to the low of the year. Interesting, it made a higher high and a lower low than the prior week. Small trading range compared to this trend down. So you notice across the board, all the metals in the category, all red. They all broke below the low of last week. The demand is not showing here in metals. Since that's occurring, why would you want to buy this week? I would not want to be buying this week when there's showing of more selling opportunity than buying opportunity in the metals. And let's continue into the agricultural, grains, and livestock. Corn, here's the high of the year. Here's the low of the year. Very close to the low of the year. There's the low of the year. And look at this current week, red, lower low, lower high. Again, commodities, grains, and livestock. We're talking about the food products, the food staples. Dollar is helping them. A strong dollar is helping keep inflation down on food products. That's a benefit of a strong dollar. Here's a swing high. So if you're bullish corn, because corn has many usages, corn is used in ethanol, corn is used as feed for livestock, and corn is used for human consumption, as well as other industrial use. So if you're bullish, this is a swing low. Wouldn't you want to be buying at the dip, the retracement, if you're bullish? Versus buying here where it dumped. Wheat, high of the year, low of the year, very close to the low of the year. And look what it's already done. It reversed. Higher high, higher low than last week. Huge consolidation phase. In soy, high of the year, low of the year. It's already trending off the low of the year, trending up nicely. Okay, now we're looking at livestock. Live cattle, high of the year, low of the year, red for the week, lower high, lower low, big shadows on the bottom, buyers already stepping in, very close to the high of the year. But again, this staircase pattern higher high has been broken, and one should be concerned that it did make a lower low here, and this high has not taken out that high yet. So again, we have grain products near the lows, which is good, and we have the livestock showing near the highs, making the food product on that side expensive. Feeder cattle, low of the year, high of the year, the trend is down. Lower low, lower high, swing low, potential buying opportunity down here. We'll see if we get a reversal. Look at this big point down here too, potential trading area. Extend this out. There we go. And hog. Yep, lean hog, high of the year, low of the year, coming off the low of the year. Red for the week, but making a higher high, higher low. Right now, current candle is a bearish pin bar on top of a trend. Rejection, midpoint here. In weekly candles, look how good this technical setup is occurring. One would expect when it went up here is going to reject it. Then you'd be looking for the trigger, if you're bearish, to be trading bearish. Huge gap. Again, lean hog. For the holidays, it's lower price than it was earlier the year. That's it for this video. Thanks for watching.